Yet, we do have more to come. I'm going to present to you another powerful keynote that we have, and that will be by the title, Southeast Asia Funding in 2016, What Founders Need to Know, by Khailee Ng, Managing Partner of 500 Startups. Let's get Khailee on stage. Welcome, Khailee.
Clap along if you feel like a room without a roof. Clap along
Check.
if you feel like happiness is truth.
All right, come on. Step right up. Take a seat right here in front. Tons of space right here. Oh, man. Woo! Super cheerful. What's everyone so cheerful about? I don't know, man. I don't know. I've been kind of depressed lately, actually. I don't know what's it to be so cheerful about. I mean, have you been reading the news? Have you been reading the tech news at all? It's really depressing. Let's start with the upper left over here. Tech funding slowdown hits venture capital firms. Holy shit! I'm a venture capital firm. I'm getting hit by a tech funding slowdown. But there's some stats there. Number of venture funds that closed last year decreased by 13%. All right. Data point. Smart money pulls back from early stage startups. So they're evaluating US seed stage investments where the so-called smart money are the venture capital firms themselves, the blue chip ones. And yeah, there's a significant decrease over there. And then TechCrunch goes on with the early stage slowdown explained. They're explaining something that is happening, apparently. So, and it goes more. Look, IPO slowdown. A look at company profitability. And they put this picture of this snail. So it's very serious when you actually put a picture of a snail, right, to describe a slowdown. So I'm getting really depressed, really, you know. And it goes on. Go down there. Our IPOs, the new down rounds, it goes on. And I get depressed. So I just switched to BuzzFeed. More than 600 corgis had a beach party, and it looked like such a blast. Right? I mean, this is real news here. More than 600 corgis gathered on a beach in Southern California on a Saturday for the 13th ever Corgi Beach Day. Like, that makes me happy. You know, I'm sick of all that stuff. I'd rather spend time over here. So you guys probably read some of these articles. You saw it getting spread around. I don't know. I just want to be real with you guys, man. Who here thinks that a lot of this stuff happening in the U.S. is it's gonna trickle down with the markets, you know, in China and everything, and the write-downs of unicorns, that it's gonna affect the funding sentiment over here in Southeast Asia? Who feels there may be a bit of a slowdown in 2016? You gotta be real with me, man. Right? Right? There's a couple of hands, some meat hands going up. That's a fair point. Okay, that's a fair point. It's also a very popular opinion. Now, who feels that, like, there's actually going to be an increase? I'm biased to say there's an increase. Let me get it out right, okay? I'm in the business of, like, selling. If I'm in the business of selling perfume, I'll tell you that this year, everybody wants perfume. You know, so I'll tell you I'm biased, right? Okay, there are a few hands coming up. Now, here's an even more challenging question. Who sat down and looked at the data to back up whether or not there's going to be a funding increase or decrease? Just tell me who's nerdy enough. Like, I wasn't nerdy enough to do this until like 48 hours ago because I had to prepare this keynote. So, okay, so there's one hand I saw gone up. So it's nerds and geeks don't want to elect themselves publicly. I understand. So let's. So I dug it out. I pulled together some stuff, and let's have a look at it together. Okay, according to Tech in Asia, which I believe everything they say, by the way, they first quarter of 2015 versus the first quarter of 2016. Asia-wide venture capital funding grew 2x. Southeast Asia specifically grew 2.5 times to $500 million US. And that being said, Southeast Asia is still only half of India, according to Tech in Asia. I was like, oh, that's interesting. Now, CB Insights, which has actually less data captured compared to Tech in Asia, if I do say so factually myself, they've been reporting an increase. The blue part there are seed deals going up to from 2012 all the way to 2016. So from 2015 to 2016, it's like 200, goes up to 230. Series A, Series B. Okay, it looks pretty healthy. It's up and to the right. Let's go back to Tech in Asia again to take a closer look at seed and Series A investments. Okay, so Series A had a little bit of bump over 2014. 2013 seems to be a bit higher according to their data. Series A seems to be shooting through the roof. So seed, which is the area I care about a lot, right, grew from 12% to grew to 57 million in 2015, according to this data set. So these data sets, like, you know, they're not here to try to tell us how accurate all these things are, but relatively speaking, I was trying to look for data that things are actually going down, or at least trending downwards. I was trying to look for leading indicators where things are going down. So I wanted to see whether less and less funds were being raised, and that's a very important point. Now, I'm missing out a lot of my fellow co-investors here, and I co-invest with you a lot, so I know kind of where you exist, but I'm just pulling out from the press, right? So 2014, new funds announced, $315 million for Southeast Asia. 2015, 680. 2016, 1.35 billion. Every year is doubling how much VC money is dedicated to Southeast Asia, it seems. Now, this one is, again, it's just like pulled together from various sources, right? I'm not saying that this is the gospel, but directionally speaking, something's happening over here, which makes it very difficult for me to imagine that it's gonna be really bad for 2016. Now, I'll tell you on a nuanced level why. Now, you see all of this capital that VC funds raise, I'll let you know a dirty little secret, right? The investors who put money in venture capitalists like us, they commit this capital to us. It's in our, when we call that capital, it's in our bank accounts. It's contractually, they have to give it to us no matter what happens. In some extreme cases, they may find a way to pull it back out, but that's rare. And what this means is that even if there's some kind of market weirdness, we are still forced to deploy all of this money we've raised for like a year or 2, 3 years even. So if anything, there's going to be a bit of lag time. So this is actually a very encouraging stat, which means there's going to be a lot of money for Southeast Asia, not just for this year, but potentially for the next couple of years. So with all of this data, who feels now, like, I mean, at least what from telling this data, who thinks that there's going to be a funding decrease? Like, just based on the data. I mean, I don't want to make a comment on your emotions. You own them, they're your emotions. But, you know. Well, I don't trust the media because I wanted to look within to see it with my own eyes. I want to look at my own data to see what's going on. So I dug a bit deeper. 500 to 700, depending on who you ask, right? Tech in Asia, CB Insights, AngelList. These are seed deals done in Southeast Asia between 2014 and 2015. Coincidentally, that's also the 2 years which I've been investing very heavily. So how many have I done? Now, I mean, this is small compared to what 500 startups as a whole firm does, right? We've done now 1,650 countries. But in Southeast Asia, in these 2 years, I have done 120 companies. This means, plus minus, I'm 18 to 24% of all seed deals done in the past 2 years. I have been a part of it, with my team, of course, with 500 Durians. Now, Grab, Bukalapak, Kfit, Carousel, and a lot more, right? We've been fortunate enough to somehow be lucky enough to be part of a lot of these deals. And so I look at my data because I think a sample size of about 20% of all seed deals, I actually have a data set which is quite robust. I know when these companies are fundraising, how much they fundraise, what the valuations are, and of course I'm not gonna put it up on the screen, right? But I'm telling you that it's very interesting. I'll share with you some. Okay, what's interesting to me is that all the deals that I've done in 2014, half of them have already raised money. And collectively, they've raised a lot more than $1 billion US. Just the deals that I've invested in 2014. Now, of course, Grab is part of this. So obviously, they grabbed the lion's share of that. But if let's say you even take Grab out, there's a few $100 million US that the rest of the companies have collectively raised. Now, there are a lot of companies who like to have stealth rounds and so on and so forth, you know. So I want to respect their privacy. So hence, like, I'm just gonna put this out there. It's definitely above $1 billion US that they all have raised. Now, with this, I think that the past 2 years have been good. This year doesn't seem like it's going to be too bad based on the earlier points. And after looking at all of this, I had one conclusion to share with you. I really don't give a fuck. I don't care. I've looked at my role as a venture capitalist, and I've always seen this is the spirit of 500 startups. We don't go into a market and wait for a market to happen. I don't believe in being a market waiter. If you're waiting for a market to happen, you're usually too slow, or maybe I believe in market making. I believe that the actions that we do in any market we invest in can actually shape the sentiment, can actually shape the outlook of the market. I can imagine if I did not want to do a lot of these deals, if let's say we just didn't care about Southeast Asia in the first place, I don't know whether or not the earlier stats would be influenced. Probably not, because it was such a small check. But in a lot of ways, like, I feel that by doing more checks and being more bullish about the things we're doing, we can actually plant a lot of seeds in Southeast Asia which may grow to be larger companies. So That's what VCs can do. And a lot of VCs have been sharing this sentiment. They've been doing more deals. You know, like Stefan Young of Ventura had a bunch of good data behind all of this. But when we flip it back to what founders need to know, which is the title of this presentation, what is the one thing that founders need to know with this whole funding climate? Knowing all of these numbers, what can you guys and girls do to best optimize your outcomes? I'll tell you a story. Okay, so this story is like kind of weird because it's two parts of it. One's 5 years ago, one's 20 years ago. Now, 5 years ago, maybe 6. Okay, I've been time traveling a lot, so you know. So this was maybe about 6 or 7 weeks right after I sold Group Small, a company I founded, to Groupon. And I was spending time just sitting in the office, and I was waiting for a meeting. Now, this meeting was with a Chinese a venture capitalist who was very experienced in investing in China. Now, she flew all the way to Malaysia to meet me in my office, and she wanted to talk about e-commerce. And so I said, okay, I'll talk about e-commerce. You know, we'll talk. And so she said, okay, my team and I, we've been traveling across Southeast Asia, and we want to evaluate if Southeast Asia is ready for e-commerce investments. It is 5-6 years ago, right? And they found that credit card penetration, smartphone, broadband penetration, so many things tells them that Southeast Asia is a bad time. It's not a good time to invest in e-commerce. And so I have no comment, right? I was just there just building my company, transitioning things and figuring things out. So I don't care about what anyone else is doing in the market, whether it's right timing, wrong timing. I don't care about these things. But she cared a lot, and she wanted to have a conversation about it. So she asked my opinion, Khailee, do you think it's the right time to invest in e-commerce? You know, I wish I said yes. I wish I did it myself. Maybe some of us, if we really hammered hard on e-commerce 5 years ago, will be part of like Lazada and all these kind of things. I don't know, right? But I didn't have that foresight at all. I was just too myopic in my own shit. But I told us this. I said that why not let's compare it to Malaysia in 1996. This year is 2006. 1996 is 20 years ago. I was 12 years old. That was the age of Backstreet Boys. That era, the golden era, right, where Backstreet Boys ruled the earth. They roamed the earth. I told her, I said, let's look at 96. In 96, a Malaysian entrepreneur decides to launch an online-only business in Malaysia. And there are no other sales channel. The only place you can buy his products was online. Investors told him, you're crazy. Have you seen the credit card penetration? Have you seen the broadband penetration? Wait, broadband wasn't even invented yet. That was like, have you seen the dial-up penetration? Malaysia isn't ready for e-commerce. It's 1996. You can't even stream Backstreet Boys online. What are you thinking? You're going to build a whole business selling online? And that's also the entrepreneur said, okay, fine, you got it, right? I believe you. Okay, I know, it's true. These are facts. Credit card penetration did suck in Malaysia in 96. Dial-up penetration did suck in 96 because like me and another friend were the only few people who had it amongst our group of friends. And so it was like a bad place. But today, that company is worth $1.5 billion US. Guess which company this is? You're all wrong! Because like many people shouted out a guess. This company's AirAsia. Now think about it. Now what made Tony Fernandez build AirAsia relying on an online-only channel despite of all of this very few dial-up penetration and credit card? It was because he knew an exception. The exception he knew was that Malaysians and Singaporeans, very similar, if you make it cheap enough, they will do anything to go and get it. That's what he knew. 1 ringgit fares flying to Singapore. 1 ringgit fares flying to Langkawi. I remember my mom, because we had dial-up, she was like, amongst a group of friends, she bought tickets for the rest of her friends. She became a ticketing agent for AirAsia unwillingly. Suddenly, neighbors were asking her to buy tickets. I give you cash lah. You buy for me, you pass to me, you print the ticket, sure, you stamp. You know, it's like they had to do these things. Like I saw Arzumi in the crowd, right? We were building Group Small back then together. Joel, I don't know if he's here. Probably not. He's probably on another stage. But it's like we had a ticketing counter where people bought the Groupons, rather the Group Small coupons online, and then they went to the office to pick it up and pay for it. when you make something cheap enough, that was the exception that Tony Fernandez knew. And based on that exception alone, he could build up his business in that time when nobody would, in their right mind, would actually build an online company. So I remind myself of this every day because I'm not here to invest in market generalities. I'm not here to invest in people who are affected by the universal laws of the universe in general. I'm here to invest people who know an exception. People by design, by themselves, they're driven so much to lead exceptional lives. They are a walking exception. That the businesses they build defy anything anyone's thinking. That's the stuff that gets a lot of us really, really, really salivating. So with that in mind, let's model a couple of scenarios as I wrap up. First off, I don't know if there's a funding slowdown. I don't know for a fact there's funding growth. And I mentioned earlier, I really don't give a shit. But what I do care about is what's in our hands, what I can control. And so if I'm going to spend my energy on doom and gloom, in a funding slowdown, I focus on doom and gloom. I don't know, man. I think I'm just going to quit and jump off a building, right? Now, second one, in a time of incredible growth in the funding climate, I focus on doom and gloom. Why would anyone do that? Why? Maybe you can ask the person who raised their hand earlier. Haha, I'm joking. But but that's something that some people do. It's irrational, but some people do it. Maybe because they didn't have a chance to look at the data. I don't know. Now, think of number 3. If in a time of incredible funding growth, you're going to focus on being the exception, being an exceptional company, being different. You're a fintech company or you're different from others. I have one company in my portfolio doing like food delivery. Their margins of every level of unit economics is nothing you would expect from any food delivery company. And I didn't understand why until I went in and I dug out the exceptions. You can be an exception in your space, in your market, and any kind of climate, especially in a funding growth climate. It's easy for an exceptional company to stand out. Now, situation number 4. Let's say there is a funding slowdown. Let's say everything is going to shit right now. You will stand out even more because you're this one company who has the kind of substance that no company has. And that's what I think is that's gonna be a very good idea to focus on time on. So in closing, I want to show you one last thing. This is a display of the year today's unicorns were founded. All the way from 84 all the way up to 2014. So over here, I drew a little circle over here. This is during the worst times of the .com. It's during the .com crash. So 9% of today's unicorns were founded during the .com crash, complete crash, including Alibaba. So think about that for exception for a moment. So I've got a deal that I want to make with you guys, right? And you guys need to tell me or make this deal, right? I focus on looking for exceptional companies, and I want to invest in 200 companies in the next 2 to 3 years, okay? And I've worked with my entire team. We're building out the systems to be able to do that at speed and provide more support. That's what I want to do. So that's my part of the deal. But I need you guys and girls as founders to do your side of the deal. You go ahead and build those companies for me. I do my part, you do your part. Do we have a deal? 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 Thank you.
Because I'm